once again, good morning, everyone, and welcome to the Messer Financial Week webinar. And there's a number of us on the phone as presenters today, so I do apologize in advance if you hear a lot of background noise. We're the ones that are not muted. You guys are muted out there. In case you do hear background noise, it sounds like it's from your own location, though. Please place your phone back on mute. If you have questions during this presentation today, we're going to ask you to save all those until the very end. Also going to ask you to stay with us until the very end, which will allow us to go over the highlights of the presentation as well as a bonus that will be available to those lucky few of you that are on the presentation with us again today. So this morning, we're very fortunate to have with us from Lincoln Financial the Sales Vice President, Mr. Mark Berry. Mark will also be bringing in his internal wholesaler, Aviel Johnson. And with that in mind, Mark, if you'll please take over. Thank you.
Well, Mark, I appreciate this very much, and thank you, everyone, for joining us this morning. You may have noticed the title of this presentation might seem a little strange. I know we've all heard of long-term care, but I entitled this short-term care. And the reason I did that is I wanted to take a session here and go through the importance of term insurance and how it fits into the industry, but also point out a place where we may not have thought about term insurance being as important, as powerful as it could be. But to start, I want to give you a very personal story that's sometimes hard for me to tell, but I think it's important to kind of set the stage. When I was 7 years old, my father was 29. He met with an insurance agent, and the insurance agent had proposed that he needed some life insurance. He had 2 children at the time. I had a brother who was 2 years younger than myself, and a wife who didn't work. And so he met with this agent, and according to the stories from my mom, the agent had proposed a $100,000 policy. This was back in 1969. And you can imagine how much that would have been worth back in the day. Well, it was one of those things where it was a good cheap term, and that's what he had proposed. Well, for whatever reason, my father did not get the policy. 3 weeks later, he was killed in a car wreck. And so the reason I bring this up is that part of what we do every day is we might be the one chance to meet with someone and get this done. And I think sometimes, especially when it's a term sale, we might look at it as, well, it's a small case anyway, or, it's not as important. But, I can tell you from a very personal standpoint, that little tiny term policy would have made a huge difference to my family. And so I know we all know stories like that, and that's why we sell term insurance. And that's probably the most obvious place, is that the term insurance a lot of times is for that income replacement sale to a young person who has a family or something to that effect, to replace their income or even to pay off debts. And so that's the most obvious. But what I also wanted to get into today is a little bit different twist on this and look at it from the standpoint of business owners. Because a lot of times if you have business owners that we're working with, I think the tendency is to think that if we're doing business insurance, it's got to be some complicated thing, and some people don't even want to mess with it. Others think it only has to be a huge case, but that's couldn't be farther from the truth. And so what I want to have you hearken back to before we get to the business owners is back in the day when you were taking your driving test to get your first driver's license. And if you remember on the driving test, part of it there was a written test, and we had to know signs. And I'm going to draw a few shapes that you might recognize that would be road signs out on the road. Now, what's interesting about these signs that I've put up here so far, and we all recognize them, and you could probably guess what some of them might mean, but we don't know for sure unless you have the symbols or the words on them. But there is one road sign that, no matter what, means only one thing, and that is the 8-sided stop sign. It was designed to have a unique shape in that you would know what it means whether you see it facing you or see it from the back. It's the only sign that's allowed to have this shape. And the next time you're at a four-way stop, I think you'll recognize that moment when you look around and make sure that the other cars have to stop. And you'll see those stop signs. You can't see the front of them, but just by their shape, you know they're a stop sign. Now, what has this got to do with a business owner? The 8 sides of a stop sign also could represent the 8 sides of a business owner. What I mean by that is a business owner, believe it or not, there are 8 different opportunities to discuss life insurance with a business owner. And I tell people a lot of times when we meet with a business owner, we have to understand sometimes they are salespeople as well. And my message here as we meet with people like that is to stop selling and start solving. And as you'll see here in a minute, if there's 8 opportunities to talk to a business owner, then really we don't really have to sell them something. We just have to figure out which one of these situations hasn't been solved, and we can help them solve it. And so if you want a cheesy acronym to remember what I'm going to say here, if you look at the word STOP, I tell people that stands for Solve the Owner's Problems. And that's a great way to kind of remember what I'm getting at here. So let's go through real quick what the business owner has facing them and the different groups of people that they're worried about. Basically, in general, they have 4 groups of people that they're concerned about. The first group at the top here, I'll put, would be their employees. The group on the right would be their partners. On the bottom would be their family. And on the left would be their heirs. And so if you look at a business owner, many of us have these same things, but I think a business owner has some unique features in that they have employees and business partners that they might be concerned about. And so what am I meaning by this? Well, if you look at, we'll start with the employees. One of the most obvious ones is a key person, and I'll just write this up here. That would be the first employee that they're concerned about. This is that person in the business that if something happened to this person, if there was an untimely death for this key person, that it could be devastating to the business. And so a lot of times we talk to business owners about, hey, what happens to your business if something happens to this person? And we introduce the idea of key person insurance. Now, what's interesting about key person insurance is that in a survey done, at least one survey I've seen, it was almost 700 businesses. Although they all owned fire insurance, burglary insurance, and all these other insurances, believe it or not, only 13% of those businesses had key person insurance. And so it's one of those things I think as an industry, we might take it for granted that they've already had this discussion and they've already got this solved. But yet only 13% of them admitted that they even had this type of coverage. But what makes that statistic even more staggering is if you're familiar with the National Underwriters Field Guide, inside the Field Guide, and I'm sure it's available to any of you, there's an interesting table that shows the odds of death before 65 for different age groups of people. And the reason that's important for a business owner, of course, is if this person makes it to 65, chances are they're going to retire. So what a business owner is concerned about with a key person is, what are the odds of them making it to retirement? That's really the key. So one statistic I'll give you, for example, if you have a 40-year-old male is the key person for this business, believe it or not, there is a 14% chance that that person will not make it to age 65. Now, you couple that, which to me is a very high percentage, with the fact that only 13% of these businesses even have this insurance. You've got a great story here and a great opportunity, I think, to help a business owner just with that very basic discussion. But like anything else, if this key person is really good, there's another concern that this business owner has for this key person, and that is retaining this person, because if they are as good as we think, other firms are going to want their services as well. So for this very same employee, there's then the concern of retention. And one great opportunity for a business owner there is to offer to pay for a life insurance policy that key person would own, sort of like a golden handcuff. And there's a lot of fancy terms for this. We've called it non-qualified executive deferred compensation. And as an industry, we've made this a very complicated discussion. This is a very basic idea as well, where the business will fund a policy on this person. This person actually owns this policy, which is different from the key person. If you go back and look at that, the death benefit on a key person policy, and I'll just draw the arrow, would go to the business. This retention policy, though, the death benefit goes to whoever that employee picks as their beneficiaries. Now, one of the easiest ways to do this, and it's a term known as Section 162 bonus. If you haven't heard this, I'd encourage you to look this up, but many of us have. It's a fancy term, and it makes you sound like you don't know a lot about taxes. Basically, the idea is this business can bonus this money, this premium, if you will, to this employee, and the business gets the write-off from a tax standpoint. Now, it is taxable income to the employee. The business then could gross up the taxes as well. So what the business could do is pay the bonus, even gross it up for taxes. You make the employee whole, and the business gets to write all of that off as a tax write-off. Now, the beauty of this is because the employee owns this policy, all of the cash value is theirs. The beneficiary, they get to pick that. And so it's a very nice way to retain an employee. What's interesting, though, is even though the policy is on the same person up at the top, as you can see, the beneficiaries are much different. These are two different policies on the same person. So it's a great opportunity to have that discussion with a business owner about this idea for key people. Now, moving over to the right, the other concern a business owner has is with their partners. And really, if they have a business partner, one of two things is going to happen. They're going to either buy out their partner someday, or they're going to sell to their partner. And many of you recognize this as a good old buy-sell agreement. This discussion here, of course, is what happens if one of you were to have an untimely death? What happens to the business? How does all that work? A lot of times we ask businesses the wrong question. We ask them, do you have a buy-sell agreement? And many of them will say they do, which of course the buy-sell agreement says if something happens to one of the partners, the estate of that partner has to sell the business, their business interest to the business. But also just as legal is the fact that the business has to buy that partner out. And so it's a binding agreement. The real issue becomes how is it funded? And that's the real question. But I also want to bring up another statistic. Going back to the National Underwriters Field Guide, if you recall, if we had one person, and again I'll just use the male here, that's 40, the chances of them making it to age 65, or there's a 14% chance that they won't. But what's interesting here is if you have two partners, and let's make them both 40 years old, the odds of one of them not making it to 65 shoots up all the way to 26%. And so this is, again, a big statistic here. The chances for this business of using a buy-sell agreement is a 26% chance. If you take it one step further, sometimes there's more than two partners. And so I'll just go to the last phase. If you have three 40-year-olds, I'll just use that. Believe it or not, the chances of one of them not making it is all the way up to 36%. So you can see here, the more partners you have, the more chance there is that they will use a buy-sell agreement. Great opportunity to have this discussion with the business, maybe not trying to sell them on this idea, but just asking a few very well-placed questions. Could show an opportunity here of something that needs to be solved. Now, as we keep going around, the other concern, of course, that a business owner would have is their own family. This first place is the classic income replacement. I've already touched on this one, but this one is always going to be an important discussion to have. This would be a separate policy that the business owner would have on themselves, of course, and they're picking their beneficiaries, whether it be their spouse, their family, whoever that might be. Now, what's great about this story here with the income replacement is that a lot of times this can be solved with good, cheap term insurance, and that's what we do many times, is a good, cheap term insurance policy. But a business owner, sometimes they have some extra money to think long-term, And one of the things to discuss here on this step is that what they're really worried about is two things. One is that they will die too soon, and that's the income replacement part of this. But there's another discussion to have with them as well, is that later they're going to, if they do live, of course, then they're going to worry about if they live too long. And I know that sounds kind of brutal, but the point here with live too long is that if they do survive and go on and do fine, there's going to be a day when the long-term care chronic illness thing comes into play. And what's really nice about today's products is you can offer a permanent policy here and really add the riders that would include that chronic illness solution as well. And so if you have a business owner that wants to think long-term here, that's also a great discussion. But even if you do a term sell here, if you've got a term policy that's convertible to permanent, you've also done a nice play there because you've at least locked in their health. The other part of the family, interestingly enough, there's more here, and this is what I call supplemental retirement. For those of you that are familiar with the term LIRP or supplemental retirement, this is using life insurance in a very unique fashion, overfunding a policy, and saving for cash to build up inside the policy, and then you can do withdrawals and loans to get money coming out on a tax-free basis. It's a great way to supplement a retirement plan. For many business owners, their business is too small to have a 401k because that's very costly, and so they're always looking for ways to park money something, and they can do this at however they see fit for this and put as much as they want into a supplemental retirement plan. So for some people, I call this a rich person's Roth, if you will, because it behaves like a Roth once you put the money in. Finally, when we get to the heirs, there's two groups to worry with here. The first is the most obvious, and this would be their estate. And what I mean by this is really twofold. One is some business owners we know are wealthy enough and have a net worth where there could be an estate tax that they would have to pay. So obviously we would want to solve that with a good life insurance solution into an ILET or some type of trust. The other thing, though, that's unique to a business owner is this, and I call it estate equalization. A business owner usually has a plan for passing this business on to the next generation. Let's use the most obvious example. Let's say a business owner has 2 kids, and one of the children is going to take over the business, but the other child is going to have nothing to do with the business. Well, to be fair to that child that's not coming into the business, whatever the business is worth is going to the one child. Estate equalization is basically you would have a life insurance policy worth whatever the business is going to the other child, and that's a very easy way to make everybody whole without the pressure of this child that's not interested in the business taking half of it just because you want to be fair. So estate equalization is a unique discussion to have with a business owner as well. And finally, for the heirs, a lot of business owners might be charitably inclined, and so I'll put charity here as well. Obviously, life insurance with its leverage can create some great charitable contribution ideas. But the other thing I'll mention, if you're not familiar with it, is a term known as charitable remainder trust, and there's several ways to package those. But those are a very unique and effective way of giving money to a charity and yet still creating an income back to the donor during their lifetime. With today's low interest rate environment, that's a very attractive idea as well. So that's a higher level type of estate planning, but certainly worth looking at if it's something that you have on your docket to kind of go to the next level. So I know this is messy here, but the point is, if you look at this, there are 8 unique opportunities, and believe it or not, each of these is their own separate policy. Now, what does this have to do with term insurance? If we go back around the horn here, if you will, and look at what type of insurance would work for these, and I'll just put the letters here back up to the key person. I put a big T here for term insurance. A great solution for key person insurance is term insurance because that is a temporary solution. Usually the key employee, again, if they could just make it to retirement, then they've they've done their service for the company. So great place for a term sale right there. Now the retention sale typically is more of a permanent product. I'll put, usually it's a VUL or an IUL, something with cash value in it or something more permanent. You could certainly do guaranteed UL as well, but that one usually has to be a permanent type policy to make that one work correctly. But over here at the buy-sell, again, term insurance is a great solution here. That's usually a temporary solution. And so there's two more term sales right there. We go to income replacement. That's a nice term sale. If you recall, you could do permanent, but I would say on this one, if you do term, you definitely want that to be a convertible term conversion option to go to permanent if you can. Supplemental retirement is going to be a cash value policy. So VULs and the IULs, certainly for that. And then estate planning, of course, is your guaranteed product. So you're going to want a GUL or a guaranteed VUL of some type, and typically, and even survivorship, by the way. And then the charity is the same thing. That would be more your guaranteed products. But if you look at these 8 different solutions here, half of them are term insurance. And I think a lot of times, again, we don't think of term insurance as being that powerful. It's just a quick fix. But for a business owner, the term solution here could be very powerful. Those 4, just the 4 terms up here on this screen, if you really look at it, are probably some of the most personal for that business owner. So it is a big deal, and it's good to get a good idea of what you can do with that. I'll give you kind of the shameless Lincoln plug here real quick, and this isn't about Lincoln, but understand this, that if you do something like this with a business owner, you really want to underwrite them one time. You don't want to have to go through it several times, and so you're going to want to go with a company that can provide all of these products in a very efficient way. And so with that, I want to turn this over to my internal partner, Aviel Johnson. Aviel is going to go through a few. There's some new things that are happening with Lincoln, with our term insurance platform that I think you'll want to hear. I think it'll be very powerful for you. And with that, Aviel, I'll turn it over to you.
Thanks, Mark. Good morning, everyone. Before I get to our new term offerings, I just kind of want to recap on our Life Elements term. We had a recent reprice back in March, so I think if you're, quoting term, you'll see Lincoln is pretty competitive for $1 million of death benefit and over ages 45 to 55 and up. We seem to be in the top 3 against other term carriers. In addition to that, on May 9th, Lincoln rolled out a new product and process called TermXL. So TermXL is a new term product. It offers competitive coverage for lower face amounts, $100,000 to $500,000 of death benefit for 15, 20, and 30 years at lower age categories, ages 18 to 50. It's a fully underwritten and automated offering that utilizes e-signature and e-delivery. Application fulfillment is going to be handled in-house with a dedicated tele-app team designed to handle this line of business. So TermXL is easy and paperless. It's a tele-app electronic ticket process, again with automated underwriting. It offers a quick approval process, which means cases are issued in a fraction of the time, in that with TermXL, there's going to be no APSs required. So really, this product is for your most healthiest of clients. This product also offers the flexibility to convert to a qualifying Lincoln permanent life insurance policy with no new underwriting required. So really, TermXL is a 3-step process. Step 1, you're going to quote and submit the e-ticket, and you're going to be able to do this through iPipeline or Lincoln's website. You're going to run the quote, and you're going to see the option to complete your ticket. When you do this, the solicitation forms will populate, and this is going to guide you through the whole e-submission process. You're going to submit the e-ticket to Lincoln, and with a 24-hour period, you're going to receive a phone call from a Lincoln dedicated internal team member and they're going to conduct the tele-app interview. Lincoln does the automated ID check and review of the MVR, prescription, and MIB check. Lincoln also is going to order the vitals and physical measurements, so height, weight, blood pressure, fluids. And again, no APS is required. If accepted with TermAccel, Lincoln issues a policy at Preferred Plus to Table D rates, that's smoker and non-smoker, up to a flat extra of $5. So once approved, you're going to receive an e-policy with e-delivery. You're going to send everything back to Lincoln, and the policy is placed in force. So again, TermAccel is a new product and process. It's a completely streamlined process. Everything is submitted electronically, and Lincoln is going to order the exams and the labs, and no APSs are required. So that is TermAccel. And I don't believe you're able to view it yet on iPipeline, so I'll send those instructions over so you'll have access to that. So secondly, on May 9th, Lincoln rolled out what's called LinkExpress Tele-App. So really what this is it gives your agent and client the opportunity to submit business 3 different ways: an e-ticket, a paper ticket, or the full paper application. So the e-ticket and the paper ticket, they're really just eliminating that 50-page application and allowing the client to spend more time, the agent to spend more time with the client. And it's also going to eliminate those not in good order application pages that we receive that kind of holds up the underwriting process. So when you submit either an e-ticket or a paper ticket, the client's going to have the opportunity to qualify for lab-free underwriting. And this is going to be for clients ages 18 to 60 for face amounts of $1 million or less. And those clients that are going to qualify are going to have no major medical conditions, and they're going to have to be within, a certain height and weight limit. Again, the lab-free underwriting is for those who submit business through the e-ticket or the paper ticket process. And we have a knockout questionnaire that the agent can take out into the field in advance just to make sure the client, falls into that category before they even mention that lab-free. So during the interview process with a Lincoln internal representative over the phone, after the phone call is when we'll determine whether or not the client qualifies for that lab-free underwriting. And if they do, the case will just move along accordingly without the exam and will be, issued as soon as any admin items are satisfied. And if for some reason they don't qualify for the lab-free, all that will happen is they'll take the exam and underwriting will just move along accordingly. So again, LinkExpress Tele-App is a new way to submit business to Lincoln to kind of eliminate that long paper application. And when you submit through LinkExpress, you have the opportunity the client will have the opportunity to have their labs waived, So going back, TermAccel, because that is also an e-process, the client can also qualify for that lab-free underwriting with TermAccel as well. And again, this just rolled out on May 9th, but from what we're hearing, a lot of the feedback that we're getting is TermAccel is same like our Life Elements coming in and, like top 3 between $100,000 and $500,000 of death benefit for those lower ages. So I think that you'll find it's pretty competitive and a pretty easy process once you get up and running. So I think that's what I have on Lincoln's new offering. Mark, if you have anything else to add that you think that I may have missed, feel free to chime in.
I thank you for that, Abiel. I think the key here to anyone is we just wanted to be able to take business however you like to submit business. If you like the paper system, we're good with that. If you like more of a streamlined system, we want to be able to do that. And certainly if you're into the electronic app and all that, we want to be able to offer that too. So the real key here is we want to make doing business easy as well. With that, Mark, I think we can turn it back over to you for any questions or anything else you guys may have.
Okay. Thank you both. First of all, as always, great presentation. Mark always comes to us with information, not your typical presentation of product of a company, but he just gave you selling opportunities first and foremost and the reasons behind them. And again, as he showed with that stop sign, the simple part of it, up to 4 different types of term sales available without getting into the permanent products. And as always, again, when Mark brings us this information, you need some time to have this sink in. This presentation has been recorded. You will be able to go back and listen to it again and again and again. So it just kind of pounds into you because, as always, as agents, we're always trying to find that next opportunity, that next sale. And if you could focus in on the fact that with that business owner, you could have as many as 8 different opportunities with just one lead, that's got to help your business and your impact. The information, again, that Mark has shared with us, as in previous presentations, are on the Messer Library. You can go back and review another great whiteboard presentation he did for us last year as well. And then when we get into the basics of selling, and so often I get the term from agents, well, what non-med products do you have? Well, again, Aviel has just brought to your attention something that I was not aware of. You've got a non-med product here up to $1 million. There's just nothing out there in the industry that's even close. So once she gets us all that information, and we'll be able to add that link back on our website, because as we checked this morning, we really don't have that readily available to you, but we'll get that up and posted as well. You'll be able to take advantage of that and do your quoting with those cases, again, between the ages of 18 and 60, to do that non-med type of product. The simplest thing, again, the paper apps are gone. Once you get accustomed to doing it without paper, believe me, ladies and gentlemen, you're just going to find a whole new world open up to you. It just takes so much off of your plate. You don't ever have to worry about having the right paper. Number 2, you don't ever have to worry about not being in good order and the delay of your application and process, and the quickness of this to know that when it's done, they're going to make that call, they're going to take care of the app, they're going to order exams and labs if necessary on some products, but again, on that Link Express, that you're going to have that lab-free benefit in the underwriting just by reviewing a few knockout questions. Just make sure you're presenting to the right person. Again, as always, Messer likes to bring to your attention the fact that if you don't have E&O, we'd like to be your provider. You'll find that we're very competitive. Obviously, very important, if you're not already contracted with Lincoln, please go to our website, go to your Agent Resources tab, go to the online contracting, and get that Lincoln contract started. On the question box, let's see what we have. Great. I guess there was a little confusion, and that's okay, that we titled this short-term care. I think they were looking for something more along the lines of short-term, long-term care versus the short-term care that we presented. And again, I think it was just properly addressed to you today that you've got a whole new world to go out there and look at. And I don't see anything else in the question box at this time. As always, Messer would like to provide a special bonus to those of you who are on the web today. If you'll bring us your first sale in the next 30 days, and using hopefully the quick link process so you can go ahead and do it really a lot quicker and a lot easier. Again, we'd like to add an additional $100 bonus to that product. Please make note, if you do it by paper, you're going to need to send that directly to us so we can log it, and we'll look forward to seeing those apps come in for that opportunity. With all that in mind, again, Mark, thank you very much. I know that, ladies and gentlemen, if you don't know it, of course, Messer is going to be having our expo coming up in September. We haven't released all the details on it, but Mark will be with us. He will be presenting, and you're all going to be very excited to get to that presentation because Mark will be providing you with CE credits when you come into that presentation in September. Aviel, I hope we get to see you sometime soon for all the hard work you do for us. Much appreciated. And with all that in mind, Mark, again, and Aviel, thank you very much for your time this morning.
Thank you, Mark. It was our pleasure. Appreciate it.
Thank you.
Talk again. Bye for now.